You're welcome once more to the Life with Bridget podcast happening today. Today we have amazing guests, amazing, because I would say they are best of friends. No, will I say best of friends? Rather childhood friends that are changing the narratives for themselves. Like financially, they are doing well. So they're here to share, what we need to learn in order to be able to, secure our future. That's the right word I'm going to use. And do not forget that Life with Bridget is a podcast where we come learn insightful interviews with knowledgeable guests who are available to share their experience and also educate us on, about life, any aspect of life. Today's topic is on common myths about life insurance and what you need to know. I'm here to learn as well. Know that I mentioned that this podcast is where we learn. I take notes. Every podcast that I'm a guest on, I take notes. People find it hard to believe, but that's what I do because I want to learn. So permit me to introduce Uche, Nwosu, and Philip Omovie. I like to call Philip Tega. So I remember mentioning that he was my sponsor. Someone asked our sponsor how far I did dash you money. I was like, Michael, you will not understand, it's my sponsor. So all of you, if you're going to snatch my sponsor behind, please be very careful. So I'm going to be introducing them officially and, speaking to their bios. I'm going to begin with Uche. So Uche Nwosu is a dedicated financial advisor and a registered, okay, I'm going to take that again because I was one to literally not miss that. It's a certificate that is well earned and needs to be, said with so much respect. I'm going to take that again, Uche. So Uche Nwosu is a dedicated financial advisor and a registered retirement consultant, RRC, with the Canadian Institute of Financial Planning. I hope you heard that. As a licensed insurance agent in 8 provinces and counting. Oh, does that mean you need to get in all? Wow, okay, interesting. I have more questions to ask in that direction. This is truly, I can't even go forward. I'm sorry. That's in 8 provinces and he's still counting. So roughly you have like 5 more to go. Oh, wow. Okay. He is committed to helping individuals and families build wealth, achieve financial security, and plan for a stable future. He's passionate about advocating for financial literacy, which empowers his clients with the knowledge and tools they need to make informed financial decisions. Outside of work, he is a devoted father and husband. He has 2 kids, always striving to create a secure and prosperous future for his family and the community that he serves. Welcome, Uche.
Thank you.
And now to Philip Omovie. So Philip is a registered nurse by profession. I still don't understand like what's going on with Philip. You're a registered nurse. Where are you running to? And he was successfully transitioned into the financial industry, driven by his passion for financial education and wealth building. Now he's a licensed financial advisor across multiple provinces in Canada. He specializes in helping individuals and families gain financial security through smart planning and informed decision making. I like that. As a financial educator, Philip is dedicated to equip people with the knowledge that they need to navigate the complexity of financial management. He is a proud husband and a father of 2 sons, committed to both his family and his mission of fostering financial literacy in his community. Welcome, Philip. I truly appreciate your presence. This means a whole lot, to this podcast. I appreciate and I thank you. Is there anything that you feel that I've missed out in this bio or something you would want people to know about you?
Is that for me?
I'm going to push that to you, Uche, first.
No. You did a good job. So you captured everything I wanted to capture. Thank you.
Okay, this is me putting myself a pat on the back. Okay, and for Philip, is there anything you'd like to add?
No. Like your introduction was all encompassing, so that's great.
Wait. Why are you both feeling so modest? I don't understand. You have to honor. You need to honor your experience.
No. You touched thing. I think the basics that they need to know about us, you mentioned it. Yeah. So that's enough for now. Yes.
So thank you for those that are joining. Thank you so much for taking out time out of your busy schedule to join us. Today's topic is on common myths about life insurance and what you need to know. I'm here to learn, so let's all learn together. So this takes me to my first question. I'm pushing this to you, Uche. What are some of the biggest myths about life insurance that you've encountered?
Okay, so there are several of them, but since you said the biggest, I'm just going to mention one or two because so one of the first one is that most people think that life insurance is only useful when you die, when you pass. So the only benefit you get from life insurance is when you pass. That's a very, very, very big myth because life insurance is so flexible and there's a lot of there are different types of life insurance depending on what the client needs. So it can address whichever need. The kind of life insurance you get can address whichever need you want. So it's not just when you pass. There are a lot of living benefits for life that life insurance can give you. Life insurance can be like a tax advantage vehicle for building wealth. Life insurance can be like a go-to, you know, whenever you have financial needs. Life insurance can be like a go-to place
Mm.
because the money that you grow in life insurance is tax deferred. Like it gives you the advantages of your TFSAs and your, those tax advantage registered accounts.
So when
So no, life insurance.
because when you say tax deferred, do you want to shed more light on that, please?
Okay, so like your TFSA, when you grow money in your TFSA, the government is not taking tax on whatever growth you're making on that
Mm.
money. So it allows the money to grow. So TFSA, even when you withdraw the money, you don't pay tax. But things like RESP, the government allows you to grow money for your child's education tax free. But at the time you're withdrawing it for your child, you might have to pay some taxes depending on the child's whether the child is working or not, because it's in the child's tax bracket. So the same thing with life insurance. As you're growing money inside your life insurance, you're not paying tax. And if you look at the three buckets or the three tax behaviors or tax what do I say that we have in this country? We have the tax advantage where you don't pay tax, the tax
Now,
deferred where you pay tax at the end of the growth, and there's the tax now. So what people want to avoid is the tax now because
Mm.
that can hinder compounding. So whatever hinders compounding can hinder your ability to grow wealth. So life insurance is in the tax later or tax advantage division or segmentation. So that is where you want any money you're growing for the long term, especially, to grow in. So that is one of the benefits you get from life insurance, not just the death benefit.
Interesting. Tega, I'm sorry, Philip, do you have anything you need to add to that?
um, one myth that I found common at the moment is the religious bias. People strongly believe that because they are Christians, they believe in God, they pray, that their life is ensured, it's safe in God. I get it. I'm a Christian and I solely believe in miracles and healings and stuff like that. But life happens. So just solely believing that God will protect you and heal you and not make provisions for contingencies, for emergencies, for situations when life happens, that's a myth. Because when it happens, there is so little the church can do to support you. There is so little the pastor can do to support
Agree.
you, and you'll be right. So that's believing, in God, in healing, and miracle. That's something we need to unlearn and get rid of. Yes.
Interesting. So how do you think, this is to Philip, sorry. How do you think so many people misunderstand life insurance? I know you mentioned the religious factor of it, but how do you think so many people misunderstand the life insurance when it comes to the affordability and the cost of it?
Thank you very much for that question. So there is a huge misconception because people are not very knowledgeable. They don't really understand a lot about life insurance. They just base their understanding on what they see on social media, on what they see on Google. They've not had a one-on-one conversation with registered agents like us who will go through their financial situation, go through their insurable needs, and see, what is best suitable for them. So, like, they are basing their understanding on what they hear from from social media and from those other machineries, right, and not from experts. So when they sit down with experts can tailor a plan, something that will suit their need within their own costs, within the amount they can afford, so sitting down with professionals, having these conversations is a great way to find out, the most suitable and affordable product that will work best for you and your family.
Interesting. Do you have anything to add, Uche?
Yeah. So, as a Christian, I'm going to go to the Bible. The Bible says in Hosea 4 verse 6 that my people perish because of lack of knowledge. You understand? When it comes to life insurance, you can't know it all. You have to be open to learn about it. Sit down with someone that is trained, to have this kind of conversations. Sit down with them. I've met a client, his wife, I don't know if I'm allowed to say some stories here.
Yes, you can.
His wife was
But just
pregnant.
keep names if you feel it. Yeah.
I'll keep the names out. So his wife was pregnant, and I spoke to him. See, your wife is pregnant. You don't have a life insurance. It is not good for your wife to go through this birthing process without a life insurance for two reasons. Number one, the birthing process is so complicated that it can lead to death. We know that it's a near-death experience. Like, we always know that God saves anybody that goes to give birth and comes back. It's like going to going so far away from the world and being back is something that we need to. So that's number one. Number two, she can come back not as healthy as she went, and hence be uninsurable. Those are the two risks there. And I spoke to him. Let us do a temp 10. A temp 10 insurance. A temp 10 insurance at that time for our age was costing $11 per month. So if he had paid $11 per month, his wife was going to give birth in 2 months. So $11 per month at the time of setting up, then probably another $11 per month before she gives birth. Unfortunately for him, his wife passed. So,
oh my God, this is sad.
Yeah, unfortunately for him, his wife passed. So he came back to meet me and said he regret that he would have done, so he had to cough out 20K to bury her. He had
Whoa, that's so
to
much.
inherit, he had to inherit her debt, of which he's still paying that debt till today. All the debt and all the credit card and everything, he had to inherit them. This life insurance would have solved that problem. At least you mourn your wife without having to go through any financial burden in addition to that. That's the kind of thing. So when it comes to availability, people don't know how cheap it can be for you, for them. So just have a conversation with a professional and see what it is for you. You are allowed to do some shopping when it comes to life insurance. You don't have to go with one option. And the professional is able to provide you several options for you to choose from that meets your needs. Yeah, so that's where I'll keep it for now.
Thank you. Wow. Okay. So the next question is, can someone with pre-existing health conditions still get life insurance? Because I know they're very particular about, especially age or your the older brackets, and maybe there's conditions, that may be in place that may hinder some of this. Philippe, do you want to speak to that?
Yes. So basically, everybody can get a form of insurance coverage. So they might get a rated plan. That basically means they might pay a little bit more than what a regular person would pay for a standard plan. That's an option. They can also get an exclusion of a disease. So let's say the person has a form of cancer and the person wants to get a life insurance policy, there'll be an exclusion to the death condition. So let's say if you die of because you have a cancer right now, if you die of cancer, will not pay this. So basically, anybody can get a form of insurance coverage. And because we are independent agents, we work with multiple organizations, so we can easily find a suitable organization that will easily accommodate individual clients' need. So we still say it again, let's not just assume that, oh, I'm overweight overweight, I have this condition, I have that condition. Because of that, I'm just backing out from this whole idea of life insurance. You need to sit down with professionals, have these conversations, and see what options you have available out there for you.
Okay. So on the comments, we have someone mentioned that Uche is your go-to financial advisor. You won't regret working with him. Thank you,
Thank
Chinaza,
you.
for that. We appreciate that. That's a very great feedback. Wow. Thank you. So Uche, to you, some people.
I'd like to add something to
Sure,
what.
sure. Go
Yeah.
ahead.
So,
Correct.
so that's why we always preach about getting life insurance as early as possible in life. The best way to avoid talking about when you get whether you have one illness or not is to get life insurance as soon as you know about it. For parents, as soon as the children are born, get life insurance for them. It's so cheap for children, and because most often than not, they come with perfect health conditions, so they are covered immediately. And whatever happens along the way, it doesn't mean the coverage still stands. A permanent coverage covers the child throughout their life, whether no matter what happens to their health. So it's always good to get your life insurance. If you are listening to this now, speak to one of us. Get your life, see what is the need for you, so that before we start talking about having one disease or pre-existing condition or the other. Thank you.
So you didn't mention it's cheap. So what are we talking about, like in terms of affordability and cost? You said it's cheap for kids. So how much is that,
Okay.
like roughly?
Yeah. So for a child to be covered for $250,000 permanent coverage.
Mm.
You know what I mean? Permanent coverage. I mean a coverage that grows cash value. That when the child is 20 years old, 30 years old, they have money that they can fall back to for whatever they want. It can cost the child less than $100 per month.
Mm.
The parent, it can cost the parent less than $100 per month. I'm talking of $75, $100, depending on the plan, what riders you want to add to it. So it can be that cheap. And the good thing is that the parent pays it off in whatever time they want, maybe 10 years or 20 years. It's paid off, and you hand it over to the child when the child is of age. The child does not need to contribute a dime into that policy, but the policy keeps growing in cash value, and it covers the child throughout their life. It's a no-brainer when I talk to parents about this. So that's
So which means that, say for example, I decide to register my kid for life insurance, and I decide to okay, I want to just do this for 10 years for him. Is that something that is doable?
of course, of course. Is we is A permanent life insurance is so flexible. Flexibility is one of the selling points of a permanent life insurance. So for kids, you can decide you want to pay it off for 10 years, for 11 years, for 11.5 years, as flexible as it goes, so that's available.
Interesting. So I said I posed a question to you. Some people think that life insurance companies don't pay out claims. How do you address this concern? I know I don't know if it was you or Philip that touched light on this, but I want to know, like, is it when I die, somebody else is going to benefit from that money? I need to eat my money while I'm alive. Come on.
Very good. So we have several bodies. So first of all, whoever thinks that is coming with a baggage from where we are coming from, you understand? So one thing I would advise the person to leave that baggage and learn what works in Canada. In Canada, these facts are not hidden. You can go to Canadian Life, CLHIA, their website, this Canada Life and Health Insurance Association. They have a report that they publish every year. If you go to that report, you will see that the amount of claim paid out is upwards of 90-something percent. Over 95% of claims that were paid out in 2023 for the 2024 report. They're talking about 2023. You understand? So you will see that everything is open and plain. There are a lot of companies that make sure that the integrity of the insurance industry is maintained. There's a company called Assuris. So if you have a life insurance, and even if the life insurance company folds or goes bankrupt or goes under, you are still guaranteed of your payment. It's more guaranteed than the money that you keep in the bank. Like the guarantee of your payment when life happens is more guaranteed than the money you keep in the bank. And it's public information. Please go out there and do your research. You'll see,
So there's a question in the chat. Atim asks that can the kid withdraw from it when they want, whenever they want?
Do you want me to answer that? Or okay, I talked about the
Both of
kids.
you
Let me.
can, you can, and then maybe Philip can touch light on it today. So let's have from both sides, right? Yeah.
Okay. Very good question. So the answer to that question is yes. When you open a life insurance for your kids, you are the owner as the parent until you decide to hand it over to the kid when they turn 18 or above. Even when you are still the owner, you can withdraw from the policy, the money that has grown in the policy. Also, when you transfer that policy to your kids, they now become the owner. Along their life, anytime along their life, they can withdraw from the policy. And the good part is that you, aside from having the option to withdraw, to take cash like like a normal savings account or whatever, you can also leverage. Leveraging means you have your money there, but you borrow against your money to solve a problem that you are going to return the money back. That leveraging does not stop your money from growing inside the life insurance. So it is also a leverageable asset. And if you know about building wealth, the more leverageable assets you have, the more the faster your wealth builds, because your money is like working for you in two places. You have your money in the bank, but you can clear your money. Your money is growing in the bank, but you can still have access to that money to do a project. That's what building wealth is all about. So yes, to that your question.
Interesting. Okay. Can someone with pre-existing health conditions still go for life insurance? I asked that earlier. I'm not sure. But I know someone that did mention that she had, oh my God, diabetes or something like that. Okay, I think when she filled the form, she didn't mention that. But I think they did their own due diligence and got reports from doctors, and they noticed and decided to go back to withdraw the plan. And she said she wasn't interested anymore. So do you have anything to speak in that direction?
Yes, so just like we said before, with pre-existing medical conditions, you can get a form of coverage. So one thing that I would like to put out there is that at the point of the application, it's good for you to fully disclose any existing medical condition that you have. That way, the insurance company knows upfront that, hey, this person has this condition, he has that condition, not hiding it, and for them to go to their due diligence by going through the medical information bureau, and then they begin to see information about pre-existing conditions which you never disclose. So that's misrepresentation, and that's a crime, is a fraud. So that's the reason why the outwardly maybe declined that policy. But in real sense, there's what we call a rated plan. So, or like I said before, an exclusion. So let's say the plan was supposed to cost you like $50 a month. Because you have diabetes, depending on the type of diabetes, it might now cost you like $100 or $150 because and also you can also have like an exclusion saying, since you have a pre-existing medical condition like diabetes mellitus, if you die of any complication of diabetes, this policy will not pay out. So that's solution to the policy. So you'll be covered for every other condition, cancer, heart attack, and stuff. But for complications relating to diabetes, you might not be covered. So these are the options that people with pre-existing medical condition can also have, and also have other providers who will just give you the basic, regardless of your medical condition. So talking to us to have these detailed, personalized conversations will be your best bet.
So to add to that, can I add to that?
Sure, right.
So like I mentioned, the MIB, the Medical Information Bureau, that is like your credit check. If you want to get a house and you tell them that you don't have any credit card, they're going to do a credit check and they're going to come back to you, hey, we saw your credit card with RBC. That's the same thing that happens in Canada. So there's a unified kind of information bureau, So if you're by the time you're applying for your life insurance, you have to disclose every condition. If not, they are going to be able to detect that. And if the underwriters are human beings, they go through your file and they use some criteria to either accept or decline or rate. If they detect it, it's just normal. They're going to reduce trust in you. And instead of then they might be, according from the company's policy, they might be able to say, let's rate this guy or let's exclude. But because of that trust has been broken, they might say, please, we have to decline this one. We don't know which other thing the person is hiding. Do you
I get it.
understand?
Yeah, so
Yeah, so that's how it happens.
I have another question in the chat. It says, is there a baseline amount that one can invest in life insurance, or just one choose just any amount? So Philip, I'll
Okay,
push that
okay,
to you, then Uche can top up.
Okay, so so it's two ways. Then when we sit down with clients, we do what we call a financial needs analysis, and we come up with what we call insurable need. So based on your debt, your income times 10, your mortgage if you have one, and education, we come up with a figure which is your insurable need. So everybody has their insurable need based off of their debt, their income times 10, their mortgage, and the education of themselves and their kids. So that's the figure. So let's say we do that calculation and it comes up to $2 million. That's your insurable need. So that basically, if for any reason you pass away, your family needs $2 million to maintain the same quality of life that they are currently on while you're here. So we have that figure, $2 million. So that's the figure we use calculate the amount of insurance you can get. Going by compliance, we cannot go above that. We can go below it. We don't have any, except we don't have like a legal right to go above your insurable need. So the amount depends on your insurable need. We cannot go above it.
I see. So I have one question.
So
I'm pushing it
can I
to
add
you.
to that?
Sure, go ahead.
Yeah. So to add to the question, to what Philip has said, what buys you life insurance is your health and your age. You get, so all those after getting your insurable needs like the 2 million, the type of the amount you're going to eventually pay when we put it into the system, depending on the company, is going to be relative to your age and your health. So if you're young and you have good health, for a 2 million coverage, you're going to pay lower or cheaper than someone that is older or someone that has a health condition. You get, so today or now is like the youngest you can be. You cannot be younger than what you can never be younger than what you are today. So this is the best time to sit down with us. Let's see your let's check out your needs, check out what it will cost you. You work with your budget basically, to find something for you and lock the insurability up. Just lock it up. Yeah.
Well,
That was
so I now see the value in registering the kids at a younger age. I now totally understand this. Wow. So Philip, I'm going to push this to you. I know that Uche did talk a little about that building wealth, but it'd be nice for us to provide a proper explanation on how it can also be a wealth creating tool or wealth building tool.
Thank you very much for that question. So life insurance is a wealth building tool. Universal life insurance policy, whole life insurance policy, participating whole life insurance policy. These are wealth building tools. Critical illness coverages, these are wealth building tools because the death benefits and the account value that comes back to you tax free. So in whole life, in participating life, and in universal life insurance policy, there is an investment component to it. So it's 2 in 1. You have the insurance that covers your life, and you also have the investment components to it. So when we run the illustration, you might see the minimum premium should be $50, the maximum premium should be $300. So if you go with $50, that only covers you for your life. But if you go to the maximum level, that is the wealth building tool. So the difference between 50 and 300, that extra 250, that is your investment. So your investment is like the extra money you put into it is being invested, and it grows as the account value, and over time you can either borrow money against it or take money from it, and it comes to you tax free. So in summary, whole life policies, universal life policies, participating whole life policies, critical illness coverages, these are wealth building tools because you can take money from it while you're here. You don't have to wait to pass away before you access it. While you're here, you can take money from it and it comes back to you tax free, and you have that room, that contribution room, to invest into it.
So to add to that, I'm going to speak especially to transferring wealth to your children using a life insurance, a permanent life insurance, which is a universal life or a whole life to transfer wealth to your children. In tax terms or with the CRA, there's what we call deemed disposition, or so when if a parent like goes to buy mutual funds now for their child and say, when this child is 18, I'm going to transfer this mutual fund to this child, for example. By the time you're transferring to the fund to the child, you would have incurred what you call capital gains. Let's say you bought the mutual funds for 50,000, and at the time you're transferring it, you now have about 70,000. You're going to pay tax on that 20,000 on the growth of that money before you can transfer it to the child. You as the father are going to pay tax on that growth. But when you grow that money in a life insurance, you can transfer that money to the child without having to pay any taxes, without having to incur any tax. So that's one of the very wonderful way that you can use to transfer your wealth in an affordable way to your children and even to the children's children, because that $500,000 policy, permanent policy that you bought for your child is eventually going to pay out because it's a permanent policy. Even if your child lives for 150 years, when it pays out, by that time, it's going to be over millions of dollars. It's going to pay out to your child's children as his beneficiary. Because when you pass to your child and your child becomes an adult and start getting children and getting married, he has the right to change the beneficiary to anybody of his choice, which is most likely going to be his own kids. So you as the father bought the life insurance policy for your child, but aside from the money that your child is going to benefit inside the policy, the death benefit is eventually going to pass to your child's child. So you've passed your wealth to like 2 generations. There's no other tool that can do that for you better than a life insurance. That's why I'm so passionate about life insurance for kids. Please, if you're hearing this thing and you have a child, get a life insurance for a child. I'll give you one analogy. I don't want to sound like I'm talking too much. Let me allow other people take her to talk. But see,
we're here to learn. That's the thing. We're here to learn, right? So if there's any information that you think is going to be useful, of course, go ahead to share that.
Exactly. So I'll give you this analogy. Life insurance is just like you being in a vehicle. You guys are traveling from Calgary to Ontario or to Toronto, and you start your car. You enter your car. You put your seatbelt, but you have a child in the car and he doesn't put his seatbelt.
Yeah.
No, it's very wrong. You understand? You won't do that as a parent. So that seatbelt is the life insurance. The car is life. You guys are going on a journey as a family in life. Everybody needs to have a life insurance. Everybody needs to have their seatbelt on to ensure the safety of everybody in the family. And the bad thing about life insurance is that when you buy life insurance when you do not need it, if by the time you need it, you cannot get it. For example, if you don't put your seatbelt on, which is the life insurance, you don't know when the accident is going to happen. By the time the accident is happening, you cannot say, hey, accident, wait, let me quickly put my seatbelt, then happen. No, it's already late at that time. You have to plan before the life throws you the curveball. That's what we are preaching. That is what we are, educating people about. The importance of protection for the whole family, not just the father or the driver, the breadwinner, the whole family, kids, everybody that is doing that life with you.
Yeah. Wow. I have this is me writing.
Yeah,
I love to learn new things. So, that's why this whole podcast was birthed, so people can learn. Learning it's an investment that we put for that we invest in ourselves. Wow. This is truly insightful. I like that. Some people believe that employer provide life insurance and they think that's enough. Why is that not always the case? So I'm going to push that to Philip, and then Uche can top it up.
All right. Work coverages are not adequate, just to be very direct.
Okay.
Most times you get ×2 your annual income. So if your annual income is $80,000, group coverage you get from your work will be like 160,000 maximum. So it's something, but it's not adequate. Another thing about it is that it is owned by your employer. If you change your job, you change employer, you lose that coverage. So it's good to have a coverage that covers you regardless of where you are, regardless of where you go to, who you choose to work for, you have that coverage. Then just going back to that insurable need, 150,000 or two, the highest I've seen so far is like 200 grand in Canada, group coverage so far I've seen. That is not enough because your mortgage, average mortgage in Canada is like, let's say 350,000. So that alone cannot cover your mortgage. Your income ×10, like if you even work minimum wage of 40K a year, that's 400,000 for 10 years. That's 1,000 or 150,000 cannot cover your income for 10 years. Your kids' education, you have 2 kids, 3 kids. The average cost of education for a Canadian to go through university in Canada is like 60 grand. So if you have 2 kids, you're required to have at least 120K for your 2 kids to go to school. So with that group or work coverage of 150K, it will not cater for all these financial responsibilities that you'll be leaving behind if life happens to you. So as a rule of thumb, we all appreciate what we get from work, but you need to get something else, a personal insurance coverage that will cover all your insurable need, and it's not tied to any employer. It does not expire. You're not like trying to please your boss to stay in a job because you want to get a form of benefit from them. So just to put it out there, regardless of what we have from work, we need to have our own personal insurance coverage that will cover all our financial responsibilities, just in case we are not here to meet up with all those financial responsibilities.
Philip, Uche, you want to add to that?
Yeah, very correct, Philip. So to add to that, the life insurance coverage, the group coverage you get at work, if you get ×2 of your annual income, you are very lucky. It doesn't get to that. I tell you, go and do your research. Out of 10, not more than half will get up to ×2. It's basically ×1 or 1.5 in a very generous company. But let's even let's say it gets to ×2. So the reason why they give you that coverage is to keep you working for the company. Because why I said that is because group coverage in your company reduces as you approach 65 and terminates at 65. So you don't want to be in the facade of having a group coverage. Then when you get 65, when you actually need that group, when you actually need a coverage, and you find out that you do not have a coverage, you understand? So that alone is why group coverage are very inadequate. And when you leave the job, some of them might allow you convert it to personal, but it's going to be in their own terms. I've seen people that what you pay $100 for if you did it personally, or $200 if you did it personally, they'll give you their terms, and you're going to pay up to $400 or $500 with underwriting. So at that time, if your health is now bad, they will underwrite you with that your bad health and your age at that time, because before you got this group coverage, you were not underwritten. They didn't come and take your blood test. They didn't ask you a lot of more personal questions. You get? So it is not flexible, it is not adequate, and it's not going to stay beyond 65. So that's why you need a private personal insurance.
I said that. So Uche, I have a question for you. How does permanent life insurance differ from the term insurance when it comes to building wealth?
So,
because I think all of this is building wealth for the next generation. This is just how I see it.
Yeah.
I may be wrong, but you know.
So a term insurance does not build any wealth. A term insurance just only covers temporary needs. So if I have a mortgage now, and I because I borrowed money from the bank to buy that mortgage, and my children and my family that I love so much are living in that house, in that mortgage, I want them to still be able to live in that house even if life happens to me. And I'm paying that mortgage for 25 years. So I'll get a term insurance of the cost of that mortgage, for example, 700, 500,000, and say, hey, life insurance company, I'm getting this mortgage because I'm paying for 25 years. Give me a term 25 life insurance to cover me for 500K. So if within that 500, that 25 years, life happens, you pay off the mortgage and my family will still live in that house without having to pay anything. That's the kind of use case for a term insurance. So it does not grow cash value where you can build wealth or have access to money later. So that's the major difference between a term and a permanent insurance. No cash value is built. So I can see the question, if it permits me, because it's on the same line. Say, what happens if you outlive your term life insurance policy? Of course, that's why we say term life insurance should only be used or should only be recommended if, number one, cost is the concern for you. Like right now, you just came to Canada or you're not doing a very big job. You're just trying to find your foot. Get a term. Most terms are convertible and exchangeable. In the next 1 or 2 years, when things change, you get a permanent coverage. But not being covered at all is where the problem is. So, of course, there's the risk of outliving your term insurance, but you can always convert it at a future time from the day you get it. If you outlive it, some companies or most companies will allow you to renew it. But you outlive something that you get now. Let's say I'm 40 years old and I'll get a term 20. I'll be 60 years old when it expires. Do you know what it will cost me to get another insurance at 60? It will cost you more than 10 times of what you're paying now. So it's better to get a permanent that you pay now and pay it up in 20, and it will be there for you throughout your life. So that'll be the answer.
So I have a question from the comments. What are the key differences between term life and permanent life insurance? Okay, that was what you just covered now.
Yeah.
But Philip, do you want to add anything to this?
Yes, thank you. What I'll just add is that life expectancy at the moment is trending up. So for an average male in Canada, if you don't die of an accident, you will live till an averagely 79 years for a male, and for women, 83. So longevity is there. We are guaranteed of longevity, except we engage in some risky behaviors and, so like Uche said, time is good, but most times you outlive it. So you can start with it for the meantime till when you'll get to a very, very comfortable financial spot. But the ultimate goal is to get a permanent coverage that covers you for life, that does not expire.
Okay. So another question. How do you determine the right amount of coverage for your, I don't know what words mean here.
So I don't know what word means, but I'll just answer it without the understanding of what word is. So the way you determine the right amount of coverage is still through a financial need analysis. We already said that before. You have to sit down with an advisor. Click on there's a contact or whatever in Philip's bio and my bio. You can click, and my calendar link, at least I can speak for mine, is there. So we can have a one-on-one discussion and do a financial analysis for you personally. Life insurance is not a one-size-fits-all. Different individuals and their peculiarity, they have different health peculiarities or health condition status. They are different date of birth. They are different. Everything, their build, their body build is different. Their gender might be different. So all those things determine how much it will cost. So I cannot just tell you this is it, but a financial analysis is what is going to give us what we're going to work with.
Okay, so the word was, he meant, sorry, that's need. So there's another question that says, I'm sorry, what happens if you outlive your life insurance policy? That's interesting.
Yeah, I didn't answer
that. You lose it, it's gone, sadly. And you have no more coverage once it expires, yes.
Yeah, so most companies will give you the option to renew it, renewable. But if they tell you how much, you will tell them that you cannot afford it. So because I have a client.
What's the advice here? Like, what's the way forward on this question?
Okay, so let me just give a short story. I have a client. She's 60 years old now. She bought a term 30 life insurance. 30 temporary life insurance for 30 years when she was 30 years old. She was paying $99 per month for I don't know the coverage, but that was what she was paying. They just sent her, the life insurance company just sent her an email by the time we spoke that her 30 years has expired, that her new, for them to renew it, her new coverage is going to be, guess what? 1,600 per month. So she's going to go from paying $99 for 30 years because they now assessed her at age 60. They now assessed her at age 60. She's now older. She's now more risk to them. She's now, so they now told her that her new coverage will now be 1,600. Whereas if 30 years ago she had gone for a permanent coverage, she was paying 99 for this temporary. She'll probably be paying 200 or 150. Then for the permanent coverage, which would have paid off in like 20 or 25 years, and stop paying, she'll be done with the payment. But that coverage is still going to be with her till now. She will not have to bother to bother about any payment now. So what I tell people is that if you go with a term if you're asking yourself, should I go with term or as against a permanent? It's just like asking yourself, do you want to suffer now and enjoy later, or you want to enjoy now and suffer later? That's just the answer. So suffer now means you are paying a little more now, maybe a little $100 more now, but later you don't pay anything and you're still covered. Or you want to enjoy now and pay $50 or $20 or $11 now, but later it turns to 1.6 when you're 65 years old or 60 years old. You don't want to do that. So that's just the explanation to that.
Yeah, so I have some interesting question again from the chat. One says, how does life insurance work for business owners, that's entrepreneurs? So I'll push this to Uche. Then the next question, I'm going to push that to Philip, sorry.
Okay. So entrepreneurs are, even if people that work for companies need life insurance one time or two times, entrepreneur needs it 10 times. Why? Because at least the ones that are working with a company, the employed people, they have group coverage. If they pass, their family will get one time of their annual salary or annual income. But an entrepreneur, everything is going to be planned by you. So an entrepreneurs need life insurance more than even any other person needs it. So if entrepreneurs should get life insurance yesterday, while the people that are working should get life insurance today. I'm just trying to show how serious it is for an entrepreneur. And there are other things like critical illness and disability. Most employers will give people short-term disability and long-term disability and critical illness, but the entrepreneurs do not have access to those kind of benefits. So they need a life insurance that has critical illness and disability all in one. We can provide that for an entrepreneur at a very affordable rate for their business. Do you understand? So business owners
affordable rates, what do you mean? I know it's not one size fits all, but what do you mean here?
Yeah, I can't give a cost to it. It depends.
Okay.
Then we can still go one side further or one step further and provide group coverages for the employers of the business. If they have employers, we can provide employers and group coverages, health and dental benefit and all those things. Those things will help you retain your best hands. Those things will help you retain your best hands. If anybody gets a job, the first thing they tell you, there's a lot of benefits. We have health and dental here. You as an entrepreneur, as a business owner, you can also provide those to your clients, to your employees. Do you understand? So that is how business owners need life insurance. So it works for them as well.
Can I add something to that too? For entrepreneurs, for business owners, they can have a life insurance policy in the name of their corporation, in the name of their business. So you are basically insuring the key person, the owner, the CEO. the wife, the spouse of the owner, the key person that that drives and keeps that business going. You can insure that person in the name of the corporation. The corporation is the owner, the corporation is the beneficiary, and the payments are made from the corporation money. And that's a great way to save money on taxes, because your premiums becomes a tax deductible. So it becomes a part of your expenses on a monthly basis. So there is a lot we can do with insurance, for business owners. So just reach out. We can tailor something specific to your needs, and speak in specific terms, in personalized terms to you, to find out exactly what would be the best option for you. But for entrepreneurs, it's a great tool to build wealth for your corporation.
Okay, Philip, while we're on this, I'm going to channel this question to you. What steps should beneficiaries take to file a life insurance claim? Very interesting question.
All right, thank you very much for that question. So to file a claim, it all depends on what type of insurance coverage you have. So let's go two ways. We'll do like life insurance, and we'll do critical illness coverage. So let's say someone has a critical illness coverage that covers them for 26 conditions, all cancers, heart attack, stroke, whatever. So once the client gets diagnosed with any of those 26 conditions, the client needs a medical report, a medical statement from a professional, from a medical professional, a specialist in that area, saying, on this date, I hereby diagnose this person of this condition because of this. With that document alone, the clients can either call the insurance company directly or reach out to the advisor to say, hey, I've been diagnosed with this, I want to make a claim. So with that claim, if you come to an advisor, we'll send an email to them, we'll submit that document, the medical reports to the insurance company, and they go do their findings. Just like I said before, where at the point of making the application, there are a lot of medical questions that will be asked, and you need to answer truthfully. So they will go back and check the application we made to see if this condition that you're trying to claim now, if you never had it before. They will go back to your MIB, your Medical Information Bureau, to check to see, was this condition there before this insurance policy was made? Did this person hide this condition? They will go to their own research, their own background check to show that, this person was never sick, never had any trace of this condition. This stuff just showed up. Once they've satisfied that, a payout for whatever critical illness policy you have will be paid to the owner. That's for critical illness. If it's for death, the person passes away, the beneficiary will reach out to the insurance company with the death certificate. Same process also. They will check to see exactly what was the cause of death. If it was a natural cause or died from a medical condition. So let's say it was a natural death, the person was old, was not sick, and just died naturally. Well, the insurance company will still go do their due diligence to go check to see exactly what was the cause of death. They might contact a coroner to see exactly what was wrong. But if there is nothing fishy, there is no misrepresentation, there is no conflicting information, the benefits will be paid out to the beneficiary within its working days. Yes, so that's the process of making. Yes, that's the process.
Wow. Okay. So I have a question for you.
Let me add something to that, please, before we go ahead.
Quickly.
So there's something called contestability period, which is 2 years. So when you make an application, the life insurance, by law, they have 2 years to contest whatever you've written there, to do their medicals and whatever. Once that contestability period is passed, that's why we tell people to get. That's another reason why people should get life insurance early, because after 2 years, even if the owner of the insurance policy commits suicide, the life insurance is still going to pay. No questions asked. So it is very important when a client dies, someone that has a life insurance, they are going to check if the policy is within 2 years of application. That's when they'll go through what Philip has just explained, try to see what the cause of death was. But if the policy is beyond 2 years contestability period, they are by law, the company cannot ask any question, except rare cases of intentional, where they can prove intentional, the person intentionally wanted to deceive the insurance company. For example, they say They say, are you married? You said no. No. When it's obvious that you are married, like you get there's some, but whether the cause of death is suicide or whatever, the death benefit is going to be paid. So that's
Thank you.
just what I wanted to add
Thank you
there.
for the responses. Can life insurance help pay off death or mortgages after death? This is to you, Uche.
This is one of the most um, most common uses of life insurance. So yes, with a capital letter, yes, YES, yes. Life insurance pays mortgages and debt for a living.
Hmm.
Yeah.
Okay. I have one question. So I will have one more question from the chat, but I'm just quickly going to ask one question. I'm going to throw that to Philip and Uche. If you have anything to add, please top it up. What's one piece of advice you would give to someone that is hesitant about getting life insurance?
I would say you need to sit in front of an agent and have these conversations to see maybe a different perspective to it, maybe thrown to it, give more insight into it. For sure, there are different misconceptions, different reasons why people are hesitant about it. So when you sit and have these conversations, those concerns can really be addressed, and you see the need to have it. And just like we say, life can happen at any time. You don't have to wait for life to happen before you start figuring out how to solve it. Before it happens, get that coverage, get that protection. Just like Uche said in his illustration, it's not at the point of an accident that you pull the seat belt to secure yourself. No, you pull the seat belt to secure yourself before you start driving. Same is life insurance. You have to protect yourself before anything happens. So just sit with us, your concerns, your questions, your doubts, your fears. We would try as much as we can to address them, and you get great insight into why this is valuable for yourself and for your family.
Okay,
Yeah.
so two more questions.
Can I
Right on
so
top of
whoever is asking that question, this is your cue to book an appointment with a financial advisor, with Philip or with Uche. Let us answer your question. There's a question that you're looking for answers to.
Right.
That's why you are having that doubt. So if you're a Christian, I'm going to start with another verse of the Bible. Proverbs 13 verse 22. It said, a good man leaves an inheritance for his children's children, but a sinner's wealth is stored up for the righteous. That verse alone can answer your question. You want to leave an inheritance for your children. You need to have a life insurance. You cannot. Some people might not work and get up to 5 million before they pass. But life insurance can automatically give your children 5 million from their father, even if your work is minimum wage job. That's number one. Number two, there's the little exercise I used to tell people to do, because life insurance contract is the contract is the best contract you can sign that can show up for you when life throws you that curveball. Do a small little exercise. If the person is listening now, you say, just make a list of all your monthly recurring expenses, like mortgage payment or rent, credit card payment, Netflix, internet, phone, your car payment if you have finance car, even your savings in your TFSA, 200. Make that list and now say, if something unaffordable and unpredictable happen to you today that you need 50K, which of those things can turn up for you? Which of those things will not even be a burden to you? Like, which of those things has the capacity to show up for you? None. Your mortgage, your bank will come knocking on your door if you don't have life insurance to help you with that. Your car payment, the bank come and collect your car. Your credit card will start accruing interest. Your Netflix will stop if they cannot see money to collect again. Your phone bill will stop. Every other thing is working against you except your life insurance. You need it. You need it like yesterday. So I hope that I've been able to answer the person's question, but book a time. Let's go deeper into this thing. Thank you.
So one last question before we round this up. How can someone ensure their beneficiaries receive the death benefit without any complications? I'm pushing this to Philip and then Uche can, close that up.
Yeah, so at the point of application for your life insurance policy, you need to clearly state who your beneficiary is. And it clearly states it. And most times it can be revocable or irrevocable. So if it's a revocable beneficiary, let's say your situation changes, you're no longer with that person anymore. Let's say the kids are now grown and you have your spouse, if you can now you want to put your kids, you can now change it. So you must first of all name your beneficiary. That's the basic. Insurance company will only pay out the death benefit to the named beneficiary, not to another person, except a minor that's going to go through probate or whatever they call that stuff, So you must name your beneficiary. Then secondly, you need to have a will. I know these are difficult conversations for us to have right now because we are healthy, we are young, we are at our prime, and nobody's thinking about death. But the reality is this: we need to start making those plans now, putting down conditions, what you want to be done, who should get this, how it should be divided, where you want to be laid to rest, how you want things to be done. As tough as those conversations, appear to be right now, we just have to have them because they make things easy when we are no longer here. So having a will and having your beneficiary named ensures that your beneficiary gets your benefits.
Yeah. So
add to that,
okay.
add to that, you have to. That's why the importance of an advisor cannot be overemphasized. Your beneficiary or your family should know who the advisor of this family is. Life insurance companies like to deal with advisors. If you go to, I don't know if I can get that statistic now, from this CLHIA, people should go to that website and CLHIA.ca. Go and look at what they have there. That's a government, it's not one company. I'm not the one that wrote that website or put those information there.
Yeah.
90 something, over 80% or so of the policies that are sold in Canada are sold through an agent or through an advisor. That's the first point of call when something happens. I've been privileged to see when some of my colleagues are doing claim, trying to process a claim. It's the wife of the deceased that calls the advisor, hey, my husband just passed. It's the children that say, my daddy just passed, my mommy just passed. That's the only call you have to make. The advisor takes over everything for you. So let the beneficiary know who the advisor of my advisor is or the family advisor. Advisors are just like family doctors. Everybody in the family knows the family doctor. Everybody in the family should know or should have a family advisor. And in case you don't have one out there, I can be or Philip can be your family advisor. We are knowledgeable enough to know what your family needs, and we are in this for the long run. So we are always there. Reach out to us. Let's have a discussion. Let's set you up for success in this North America.
This is truly like really, really valuable. Now I have last two questions because a lot of questions keep popping up. But please, we're running out of time. Please. So, what are the biggest problem people have about life insurance? Because with all the juiciness, what's that one thing that is like the demerit for this? Uche,
Me?
Philip can talk up. Yes.
The problem that people have about life insurance, and it still goes down to lack of understanding of life insurance, is the cost. Let me tell people one thing: if you're listening to this podcast right now, that money, that premium you're paying for your life insurance is not the problem. It is the solution to the problem. Maybe if you understand that one, you can know that. So I just had see people say, I'm paying 200 per month for my life insurance, and no, it's not the problem. That 200 per month is the solution to a problem that can crystallize. So that's one of the drawbacks I see. And when you do the analysis, you see that they are paying auto insurance of 400. They don't have problem with that. They are paying Netflix and whatever, all those things that add up. All those things just add up. They are financing a car that they are paying 400 bi-weekly. They don't have problem with that. But the very life insurance that they're paying $100 per month or $150 per month, that is still part of it is still an investment, growing cash value for them, setting them up for life. So that's where they have problem with the cost. No, the premium you are paying is not the problem. It is the solution to the problem. That's what I have to say there.
Well. Philip, do you have anything to add to this?
Yeah, just one more thing. Not starting early is also a problem too, because when you start pretty late, your options are quite limited because you are in fixed position. You have little or no room to turn to because of it. So, starting early, like I cannot overemphasize the importance of starting early. You get more coverage, you get zero medical writing because you're young and you're healthy. But if you're going to wait till you're 40 and you're 50, yes, you'll be covered, but it will be limited and you have to undergo like a full medical underwriting. So, starting early, is just something we just need to imbibe into our culture. Yes. Yeah.
Okay, so the very last question, how can listeners get started with life insurance and make informed decisions?
The answer is simple. Just go to Philip's, just go send a DM to Philip and say, I want to get started. Send the DM to Uche. I want to get started. We'll book a meeting with you, no obligation meeting for education. We'll educate you, show you what it is for you, show you the options, show you the available, providers or partners, companies that we partner with. We'll submit an application, and that's how you get going. It is a very, very, very important thing to have in North America. We are tired of people, especially people in our community, setting up GoFundMes when life happens. We can nip this kind of, stuffs in the bud. Let us prepare for life eventualities to protect our family. We owe our family, we owe people that love us, our loved ones, we owe them this duty. Let us rise to it. Let us have protection. Let us build wealth with life insurance. Thank you.
Yeah. So I want to thank everyone for showing up today. Big shout out to the More Magazine CEO. We salute you. Thank you for supporting today. All those that sent questions and comments of support. Thank you so much. And a big shout out to Philip and Uche. This, wouldn't have been possible without the both of you. I truly appreciate the knowledge that was shared. Knowledge is truly profitable. I think I was one of those people that pushed back on insurance. Oh no, please, I don't want to hear no marketing strategies. But over time, I got to understand that okay, this is what insurance can do. And with the top up of knowledge that I gained today, I would advise that please, this is an investment you're making for your life, your children and their children's children. It's building wealth and creating it. What more would you want to give, your children? Like, what more? This is it. Please reach out to Philip and Uche. I'll be sharing their handle. After this session, I'm going to share their handle, reach out to them, ask questions. So they have like a book to give the first person that reaches out to them. Please do so. I'll post their handle like in the next 10 minutes. Please support this podcast. We're just a community building to support people by knowledge sharing from experienced people and people that are knowledgeable in various aspects of life and see how we all can grow. This is truly conversations that inspire. I'm inspired every time in my own podcast. I get inspired. I have like a note all the time I take. Thank you so much. For those that missed, this will be posted on the YouTube. Please feel free to follow us on all social media handles from Instagram, Facebook, and TikTok, and also subscribe to the channel Life with Bridget on YouTube. Thank you, Uche. Thank you, Philip. Philip is my sponsor. Don't ask me why. Leave me alone.
Philip, sponsor me too.
Philip has done this, Philip. I cannot just shout, but I just want to thank him to thank you for pulling Uche in this. I truly appreciate. Okay, guys, do you want to just say anything to people that joined today, and then we just close?
Thank you everyone for joining. Thank you for giving us this opportunity to have this conversation. It's a honor to be on your platform. I see what you do out there, educating people on various aspects of life. So I'm honored, to be on your platform to share with, your audience what we do. Thank you very much.
Thank you very much, Bridget, for having me. I'm honored to be here as well. When Philip told me about it, I was like, let's do it, let's jump on. And I went and see that you've been consistent. Just keep it up. We are going to be big. This podcast is going to be great. It's going to be big.
Thank you
Then
for the massive support.
yeah, just to mention the book Bridget talked about for the listeners is a book that changed my life. It changed my mindset about financial education and financial planning, the need for financial planning. So I have the free e-copy or digital copy to send out to people who reach out to Philip or me via DM or via comments. We're going to be looking at the comments on Bridget's page, or you send a DM. We're going to send that book to you. You're going to read the book and you see some of all the things we're talking about. Then when your eyes open like my mind was some years ago, then we can now have the conversation again. So I just want to say, let's go there, let's go out there and put action into what we've heard today. Thank you.
Thank you so much, guys. Please enjoy the rest of your weekend. Thank you.